You're looking at a chart of gold on a 1 minute chart, and it is 3 a.m. and I've taken a short entry, 10 lot. Okay, and directionally I am already biased. I'm not waiting for 3:30 because we are, if I look at where we are in terms of what I can see on the charts, we have come into this bearish order block, okay, and we've also come into this down candle, which is a bearish breaker, okay. This is the first 15 minutes of 3 a.m. and it's let me show it to you. This is important. See how it was a movement up, okay, and was kind of showing it as a bullish candle, but then you can see we're turning around, okay. So we're turning around, and therefore this should be a dark candle, meaning a bearish candle. At 15 minutes, this was all the way up here at one point, and it looked bullish, right? And halfway in to that 15-minute candles, so we're almost at the end of a 50-minute candle. It's turned around and started to go down. I'd like to see that. Okay, I've spoken about that candle formation in a previous video. So let me now on a 1 minute chart. I've already got existing short positions already. Okay, where I'm targeting, and I've already spoken about this. I'm targeting. Where are we? Well, there it is. There. I'm just going to be looking at on the hourly chart, looking into this fair value gap. Okay. And that's my other position that I've already got on. But for this scalp trade, this is the 10 lot scalp trade, I just want 50, 60 pips. And I'm just trying to find where do I want to take it off. So maybe into this gap here. Let's have a look. I don't want to hold it to the current target that I've got on for my other trade because I just want to be in and out of this one quickly. Just taking advantage of the bearish bias that I have, the key time that we've now come into. I mean, I can hold this 10 lot all the way down to where I need it to go to, which is down to that 20. What is it on the hourly? Let me see, this low on the hourly chart. I've got another monitor I'm looking at. The low on the hourly chart is 2437. 2437, which is these lows here. That must be 2437. Yeah. I don't need to hold it a 10 lot all the way down there. I'm just going to take 50 pips on this trade. So what about these lows here? Let's have a look. From our entry to that low, that's 30, 40, there we go, 50. And there's a gap there. So that's my target on this trade. Okay. There's lows there, there's a gap there. I'll just target that 2439 and just wait for that to get hit. Okay. This here is the Asia low, right? Maybe I could target the Asia lows on this trade. Let's see. The reason for my hesitation is not that I don't believe it's going to get there, it's just that I want to be in and out of this trade quickly. Okay. Because this is my London trade, right? New York might be the actual time where this really goes down with good displacement. So this is just a scalp trade from the current time. This level here is key. Let's have a look at this on a 15-minute chart. Okay, on a 15-minute chart, that's the bearish order block, right at that level. And we still might get moving back up into there at New York or even at 330. The 330 candle may still spike up into there. Okay, and so this is really just a scalp trade, right? When I do a 10 lot, I'm not looking for more than 50 or 60 pips. Okay, so I'm going to be just targeting this low, which is where this move began. Okay. Now this move at the moment, really, now that we've come below these down candles, okay, there's no need for the market to go back up into that zone of price. Okay. So let's actually put a little box. Let's just put on this little area here. Okay. Because that's the down movement. That's the manipulation to go up. We've come down into and through those down candles. And now, sure, we can go up there into that purple box that I've shaded to mitigate. And maybe we need to extend it to this low. Okay. So we've come down and we have mitigated those three down candles, right? So we went down, up, that's the manipulation. Straight through that down, up, mitigate. May need to come to the open, not sure. But there's no need for us to go kind of back up, through there past that. Okay, fair value gap here. So 330 is when this market will most likely move. Okay, and you kind of want to draw the levels you want to see the market respect. Okay, so look, I just want to show you the entry on this particular trade on the 1 minute. It was when the market went up into these two up candles. Okay, bearish order block. This down candle, bearish breaker. Okay, and that's where I shorted. Timing in that first 15 minutes in the new hour, right? I watched the candle come up, halfway mark, start turn around. That's what I want to see. You saw me into that, and now it's formed another bearish order block, okay? And we've come back into that with this little move up here. So I'm going to pause the recording, and let me see what target have I chosen. So this is our target. Let's put a label on that. That's our target for this trade, right? Not for my overall short objective for the high time frame short that I've already spoken about. For now, on the 10 lot, I'm just going to be taking that there, which is 50 pips. That's what I want. I'll come back to the recording once I close out the trade, okay? Okay, we have received the target. Okay, we've come down to the level that I wanted to come down to. Let's very quickly talk about this trade. Just to recap, we entered at 3 a.m. Okay, and we entered on the basis of, one, we are high time frame bearish. Okay, look at my previous video to understand why I'm high time frame bearish. Okay, look at this 2. Let's see, where's 2 a.m. 3:30. There we go. This is 2 a.m. Okay, this is my favorite setup. So 2 a.m. was the best setup here for this trade. Okay, up here at 2448. I've spoken about this 3-bar pattern. You go up, you take out a high, okay? You have a middle candle that wicks into a key level, and then you have this engulfment. I prefer this candle to come down and fully engulf the first candle, but it's okay if it's done in 2 candles, okay? That's the best entry, 2 a.m., second hour of London, okay? Now, at 3 a.m. is when I came to do this trade with you live, okay? And this is what I saw, okay? I saw that the 3 a.m. was coming in, and we basically have a down candle and 2 up candles, okay? The 2 up candles are your bearish order block, okay? The down candle here prior to the 2 up candles is your bearish breaker, okay? So in that first 15-minute candle, which is when I got in when there was price displacement down, okay? Indicating, okay, now the market is showing its hand, right at the new hour. Perfect. Now I'm interested in this market. I'll wait for the market in that first 15 minutes of that new hour to come back into a very high probability bearish signature after the market does what? Displacement, breaks structure. Okay, these are things that you need to pick up as you're learning, right? There's a low, so here's our down candle, 2 up candles. Okay, the 2 up candles are your bearish order block. The down candle preceding the 2 up candles is your bearish breaker. All of that pattern is only important when you go down through a low with displacement. Okay, this is nice price displacement and higher time frame. You're bearish. Okay, so we're looking for an entry now, and the first 15 minutes of that 3 a.m. candle does what? Comes into the bearish signature, which is the bearish order blocks, the bearish breaker. Notice how the market does not go above that down candle preceding the 2 up candles. Okay, that's the bearish breaker, the down candle. The 2 up candles are the bearish order block. Okay, and then that's where I've entered. Okay, a 10 lot. Now my target was just above the low of Asia. We will go below Asia, but this is a 10 lot. I want to be in and out fast. Okay, so I've looked at where can I get a good exit. I see these lows. Okay, every other gap here is pretty much, this is too high, for me to take that as a target. I want at least 50 pips. I see that all the other gaps are balanced. Here is a gap that's still open. There's clear liquidity under there. I target that. And that's within the vicinity of 50 pips from my entry at 3 a.m. You can see we're still going down because we will take out these Asia lows. I don't have to get the best target. I want to be in and out. This is the easy target. Okay? This is the easy target. So that's the entry in that first 15 minutes of 3 a.m. I want to talk about this. As you're watching the market, you see these crazy moves, and it scares you out of your short. If you're watching this live, go back and look at the recording and just watch this live. It doesn't look like, we're going up. Should I close my trade? I'm short. Should I close my trade? It scares you. But you got to be well versed in price action. Okay, this entire move is consolidation. Okay, and it does a couple of things. One, it scares existing short sellers to close their position because now it's going up, and you can see it's going up, and it looks like it's in a positive move up. When you're watching this live, it looks like it's going up. Second, it introduces longs into the market. They see this move up, they see it's come back down, and they think, okay, market's holding, right? We're getting support. They long. They see this impulsive move. They're happy. They long. Okay, but that is just distortion, right? And usually that is time distortion. Okay, so it's designed to get existing. Okay, I need to close my positions that I've got on. So okay, that's fine. Got to wrap this up because my other shorts are at targets I don't need to close out. So this is time distortion. Okay, trying to get short sellers to close their positions, trying to get long traders into the market, but it's all distortion. Okay, you'll see consolidation at above or just below key lows. Okay, so just above key lows and just below key highs. The key low for this was the Asia lows. Okay, the Asia lows are here, and this consolidation was just above this low. You see it just above key lows, okay, and just above key highs. You'll always see that kind of a consolidation. Okay, so I hope the video was useful. I'm going to journal this trade, and I'll talk with you in a future video. And I need to take off my existing short positions that I have on as well. Okay.